Hey guys, Dusty here, and today I just want to go over trade recaps for September 29th and go over what I took and basically what I saw. So, to start this recap off, I'm going to go over actually a loss that we had. As you guys can see here, the loss is very quick. I got in at 806. I literally got stopped out at 807. I'll show you guys why. So, we created this intraday demand zone that I drew it on the 1 minute because we came down after this big knife in the morning. We rejected, we started rejecting again, and we finally broke out. But I didn't like the upside pressure we got here, so I tried to take a short, kind of predicting this little breakdown back into lower day. As you guys can see, this 806 candle ripped up. Not even a lot of people got entries because of how fast I was stopped out of this play. It was literally about 40 seconds. But then we bounced right back because I was still bearish, and then I looked at 3600 puts. As you guys can see, this was a supply zone I had drawn here. I basically drew it right off of the morning because we were, after we knifed, we retested here. So I always, that's like a point of interest. And then it was official supply because, we rejected once again. So at this 810 mark, I did enter puts on this downside expecting a push back into this 362 zone. And then, we'll obviously scale most of my contracts here and then see what basic price took us to. So as you guys can see here, we caught a really nice move to the downside, about a dollar 30 move. As you guys can see, contracts moved really nicely, and everyone was pretty happy about that play. We got in at 2.7, and comms ran to 450. So this was an earlier play that we had. I didn't go over. I'm not gonna go over this one because it's not as important, I'd say. It was another really good scalp. I took my loss, and I'll show you guys why. 30% I just took my loss and moved on. But then I was still seeing the bearish pressure putting in here at the supply zone. So we took puts to the downside, and we caught a really nice move. All right, 908. I took calls here. Let's see. I'll show you guys right here. I took calls on this impulse move at 908. Let me get the exact thing. So I expected this to actually hold this time around, and I actually got this entry here at this bottom of this wick, and we did catch a nice move to the upside wick, but not a lot of people got entries because they're so quick on the move. So this next trade is something that I really want everyone to pay attention to because this is something that you have to trust yourself and basically trust the process while the trade's actually happening. As you guys can see here, we got this rejection from once we retested the supply zone up here. We came down, we started rejecting, and then we finally came back into this demand zone at this 362 level, and then we started flagging. So I had something drawn out like this. Always have my flags drawn out. I had it I always have something like this drawn out. Okay. So I knew this was gonna break down. This is clear bear flag after an impulse move to the downside. We bounced off demand and we started channeling up. If this was an actual bounce of a demand zone, it won't be as choppy going up. It would be something more vertical like this, as you guys can see here. So once price starts chopping around and forming a flag, and now I'm leaning towards the bearish side and looking for pressure to break under. As you guys can see here, I said SPX 3605 puts at 310. The key add here is that save buying power in case we need to add, because if we do get top of the flag, I'm adding top of the flag almost every time at this 363.40 level. I was like, if we do breakout, I won't add. I got my second ad at 270, and then I got my third ad. I had a full 5K size here, and I had a 260 average on this. So as you guys can see, some members like, oh, do you think we should stop out here because price is holding up? And I was telling everyone, I was like, just be patient because this is a bear flag. I just don't know exactly when it's gonna break, which is why I like to scale into the play. So once we scaled into the play, it was all smooth sailing because my average wasn't as bad, and I was at minimal drawdown percent wise from my my third ad. So we ultimately got this knife down to this 362 level, broke under the flag, came here, retested EMAs into a perfect knife. This is a very key play because a lot of people, you got to have your conviction. A lot of people, they would probably stop out of this play thinking, oh, it's not going my way, it's taking too long. But all they was seeing was an impulse move down into a bear flag into another breakdown. I was waiting for this breakdown to happen, and that's exactly what we got. As you guys hear, I was like, you guys got to trust the process. This is basically, and if you guys can read this, you guys pause the video, whatever. I was basically saying it's important to size correctly. This is a clear bear flag. If you guys are feeling nervous or scared, you just oversize. I was walking everyone through the play, and these calls went from 2.6 all the way to 8.3. all the way down to 830 from 270. So how many times would you have personally been, oh, I'm going to stop out here at the top of this flag, and then you missed the whole move down, even though you thought the move was going to actually happen? So that is something that I always preach to everyone, is important sizing in on, especially if I say keep buying power for ads. That is a good, that's really high conviction that you shouldn't be taking puts to the downside, or you shouldn't be full porting, or not even full porting, the full sizing puts if I'm calling out add-ins. So then I want to go over something that's really important here as well. So you guys see this intraday low here, right? We break this 360 level, everyone was panicking, grabbing puts down here, and what was I doing? The entire room was grabbing calls. Everyone in the room was grabbing calls. I was like, SPX Lotto's coming. We got our first ads at 2.7, 4.5 was a great move. Everyone loved it. Free for everyone. And then I called for 2.15 and we went to 3.5. Now you're like, everyone's like, Desi, how do you know this is going to bounce? How do you bottom taking this? Well, this is the importance I preach of the US 500 chart. So let's take a look at the US 500 chart. Show this real quick. This overnight PA. All right, perfect. Let me just make sure the timestamps are aligning. Let me go on the 15-minute. Alrighty. So, Desi, how do you know that this is actually just a false breakout or anything? So on SPY, it looks like nothing's here, right? But imagine these candles pushed down here and we're started chopping something like this. Let me just draw this out. So imagine candles came here and we just started coming like this and then we pushed up. Wouldn't you just consider this a demand zone? Exactly, you would, right? Because this is where price pushed up recently. However, the SPY chart won't show this price because it doesn't show the overnight price. However, the US 500 chart shows every session. As you guys can see here, this was a perfect demand zone. These are all 15-minute candles. We got 1 bounce, 2 bounce, 3, 4, 5, 6. 6 15-minute candles that aren't breaking under here. What makes you think that this is going to break under here? The risk to reward at puts down here were so small, and I saw so many people grabbing puts down here. So many. The risk to reward for calls was at a high of the day right here, because we are at overnight lows, and this is something very important that you guys should keep in mind, because this is a demand zone on the US 500 chart, and once you have both these parity, you can see exactly where the price is. Make sure you guys are also looking at the US 500 chart when it comes to this kind of stuff. Also be looking at VIX, especially when we break under big lows. We're like, oh my god, 360 is over. The market's going to 350 today or whatever. I saw so many posts on Twitter, everywhere. Everyone's taking puts down here, and basically we literally took calls. So I'm gonna go over the play here. I was like, same rules go light. These are all lottos. 11:53. Webull closed the 0 DTE at 12, so I wanted to get in before. So let me go to 11:53 here. I entered almost at the bottom at this 360 level, and then we caught the entire move up, basically to the end of the day. $3 move in like 30-40 minutes, and these contracts ran all the way from 2 to 1350. They went higher, but I didn't hold my last run. Remember, this is just the last runner. It is not my full size at all. I literally had one contract after 460. So that is it. If you guys take away anything from this recap, make 2 key points. 1, have conviction in your own play, especially if the level holds. And do not full size if we're in a bear flag. You can always add the top of the flag to get a decent average. And then, let the play run out. They're like, oh, Desi, what if we would have broke up? I would have stopped out. Simple as that. It's trading. I know my risk. I know my management. I would have stopped out as soon as we broke above the flag. Second key point I want you guys to know is the US 500 chart is very important. I don't care what anyone says. Overnight lows are so easy for calls here, and no one saw it on SPY because there was no price action here. It's just blank. Everyone probably has something like this drawn out. Because this is a point of interest. They saw, they're like, oh my god, we got this. What they would have. I know people were thinking about this. We got this bounce here at 360.6, right? We broke under, rejected. Everyone thought it was over right here. Everyone thought it was doomsday, circuit breaker out, everything, we're going to go down to 0. But obviously, switch over to US 500 chart. We're in demand. There's literally no point. I would have only took puts if we had something like this. If we would have broke down, retested into dump like this. That is the only way I would have took puts down here. The risk reward is absolutely horrid for puts, but great for calls. And we basically caught the whole move to the upside. So I really hope this helps, because I do want to emphasize having conviction in your own plays. importance of sizing in, and also having how to read basically price action when there's nothing here on the SPY chart. When we break low day or high day, I always look at the US 500 chart and make sure there isn't a supply or demand zone at that level. As you guys can see here, another point of interest. I don't even have to really draw this out. I could see it right here. Rejection at US 500, rejection into a breakout, and now we're getting rejected here. Very clean, simple play. It's nothing special. I'm not doing anything special on taking these plays. I'm just looking at price, reacting to it, and yeah. I really hope this helps. I think this is one of like the better recaps. Definitely make sure to be watching the US 500 chart and have conviction in your own plays. So this is Desi. I really hope this helped, and I'll catch you guys next time.